Hello and welcome to your carrier update. I'm here with Zach Strickland, brought to you by, of course, PowerFleet. Zach, welcome back. How are you doing?
Great, I'm great. Fresh off the beach, but it looks like the freight markets didn't take a vacation. We had our tender rejection rate for the United States stay kind of elevated here. Like it didn't really pop like we expected to over Memorial Day, but 24.94%, still a very high rate, still tight out there. I would almost have expected it, Anthony, to slide down this week a little bit or come down, but you see this little jagged tooth thing? I've never actually seen that. So I'm not really sure what's going on with all this. It's just the market itself is just so unstable at this point. Look at this pattern that you're looking at over the past several months. I mean, this is this is just straight chaos for the freight markets.
Term, jagged tooth.
Yeah, the jagged tooth of Memorial Day. Memorial Day, typically we see this increase of rejection rates. It kind of is a smooth climb out of middle of May on up and around, and then it kind of settles down in June a little bit. And then it pops back up around July 4th or at the end of June, end of quarter, et cetera. I can't even put it into words what that means, but it is what it is. They're still really high. I mean, you're talking about 24.5 to 24.9%. So it's somewhat irrelevant in terms of, are we going to notice any differences to spot rates or anything like that? The answer is not really. Capacity is still extremely tight. The thing to really look at here is this trend line. Are we going to hold this pattern once we clear Memorial Day week, if you will? If we kind of continue this trend line down and to the right here, that's what I'm really going to be watching for, especially next week, early next week, to see if the market continues this slow settling pattern, which feels like that's a lot of what's going to happen. We're going to have these jagged teeth when we have these unusual disruptions. So there's hard times still ahead for those shippers out there. Carriers are still going to have a lot of action on the spot market for the time being. So let's check out the tender volume index, and see what the demand side is. So this is the seasonal tender volume index. You have the blue line up there. That's the current year. You notice this little trough right here. That's Memorial Day. That's because everybody stopped shipping effectively on Memorial Day, and it's a 7-day moving average. So we're going to trough out. You can see these little troughs poked throughout here. That's a 7-day moving average effect of a holiday period where you have these little troughs. Then they kind of return right after the 7-day period clears. But if you look inside of each one of these troughs, there is a unique little pattern. And Memorial Day, very similar. So we see these little upticks because it's a Monday holiday. So we're going to see this kind of start to come back up. Now, the speed with which it comes back up is the thing to watch. But demand, if you look back around February, Memorial Day's impact was bringing it back to where we were in February.
Yeah.
So
that was our high last year,
yeah,
or the year before.
Exactly.
Yeah.
So freight volumes are still extremely active. Memorial Day really didn't, have a huge clearing impact into the end of the nation. Checking out the next thing, the tree map for the weighted rejection index to see which markets had the most impact, week over week. I've got Houston, Baltimore up there having the high elevated weighted rejection index. Anthony, we normally look at about a 5.5 weighted rejection index to have statistical significance. So these are the ones that do not happen with any regularity.
Right.
Negative 5.5. So we're not seeing, if you look down here in the bottom, you got Rock Island, Illinois, and Little Rock, Arkansas, not moving near as far down as Houston and Baltimore and, say, Harrisburg are moving up. And of course, those are huge markets in Houston and Harrisburg, Pennsylvania.
So Zach, when we're looking at this, Baltimore, is that something, like you said, out of the norm somewhat?
Yes, extremely. So when you're looking at a weighted rejection index, you got to think about this as a combination of volumes, market share value, and weekly change in the tender rejection index. So one of those two things has to be big,
yeah, right.
To really move it. And weighted rejection, so it takes into account the volume with that tender rejection index weekly change. And Houston, of course, has been a market of great interest over the last few months. Let's check it out a little bit deeper detail. Outbound tender rejection index for Houston, extremely volatile, as you'd expect. They're in the blue line. So you see these jagged teeth yet again over the last couple of months. The Port of Houston, extremely active right now. And it's really, you see this trend line for their OTVI, it's moving higher, very much so over the last couple of months. So this is because there's a lot more freight to move.
Right.
coming out of Houston right now. Now, the port's kind of settled down a little bit. If you look at our, TU index that Henry Byers created, it's not, it's not really showing as much activity as it did back in April and maybe a little bit in early May. But at the same time, that freight does get thrown into warehouses and stored for a little bit sometimes, and it takes a while to transload it into a 53-footer. So tender rejection rates popping, but if you look at the outbound tender volume index too, you see this huge increase in volume, and really the OTVI didn't drop as far as it was in the middle of May. So we've already recovered out of that. Still a lot of action out of the Houston market right now.
A lot of action indeed, even in our slowdowns or seemingly slowdowns for this busy year. It's absolutely nuts. But Zach, thank you so much for checking us out for this carrier update.